Hello everyone, welcome to the Financial Information channel. In this video I'm going to cover the weekly earnings that happened last week. In addition, I'm going to do the earnings that are going to happen next week. Now let's begin with the video. And the first company that reported earnings last week was Oracle. Oracle beat the EPS and revenue. Oracle beat the EPS by 2 cents and the revenue by 180 millions. The revenue year to year is positive 7%. And I was impressed with Oracle. Oracle was one of those companies that didn't have any growth, however, they have been able to turn the business around and now they're actually growing the business. But the company moved down after the earnings were reported, and the reason is the guidance was weak. They announced they expect to have the growth for next quarter anywhere between 2 to 4%. A lot of analysts expected to have the growth around 4.7% and up. And I think Oracle just wanted to have low guidance so they could have excellent earnings next quarter. And I actually ended up buying call options for Oracle. Those options are going to expire on December 17th. The company just needs to be over $50, and I think it's going to be over $50 by December 17th. We will see what happens. And the other company that I mentioned in the 5 stocks under $10 is LIGHTPATH Technologies. LIGHTPATH Technologies actually had a really good quarter. It beat the EPS by 21 cents and the revenue by 0.25 millions. The revenue year to year is 90.3%. And the stock actually was moving over 15% after the earnings were announced. And those were the only two companies that I found interesting for next week. Now let's take a look on the companies that are going to report earnings next week. And the first company is Adobe System. I mentioned this company in the 5 stocks to buy during September. And the company has beaten the EPS 4 out of the last 4 times and the revenue 4 out of the last 4 times. But the shares have moved only the last 2 times when the company has reported earnings. And Adobe year to year has grown over 50%, so the company is very solid. And the hardest part is the company has been moving up, steadily up. It has been really challenging to find an entry point to get into the stock. I think the company is going to beat the EPS and revenue again, and I think the shares might move up. And the next company is Autozone. And the company has been okay during earnings. It has beat the EPS only 2 out of the last 4 quarters and the revenue only once out of the last 4 quarters. And as you can see in the screen, in the last quarter, the company moved down over 10%. The company has been bad in 2017. It has moved down over 27%. And I think the company is going to miss the EPS and revenue, but might rebound during the next few months. And the next company is Bed Bath & Beyond. And the company has been bad during the earnings. It has missed the EPS the last 4 quarters, and it has only beat the revenue only 1 out of the last 4 quarters. 2 out of the last 3 quarters, the company has moved down over 10%. This company is facing a lot of competition from Amazon, and it has made several mistakes. It approved a buyback program when the shares were really high. Now the shares have moved down quite a good amount. In my opinion, that was a waste of money. The company has been down in 2017 over 29%. And I think this company is going to miss the EPS and miss revenue. And the next company is FedEx. Now FedEx has probably one of the best earnings last quarter. The company has beat the EPS 2 out of the last 4 times and the revenue 2 out of the last 4 times. But those 2 times the revenue were in line. And I think this is a kind of like a quiet quarter for FedEx. It's going to beat the EPS but miss on the revenue. And I think the shares might move down a little bit. And if that happens, that presents a good opportunity because FedEx is a really good company for the long term. And FedEx has been positive for 2017. It has gone up over 15%. The next company that is going to report earnings next week is General Mills. And General Mills has beat the EPS 3 out of the last 4 times and has beaten the revenue only 1 out of the last 4 times. And as you can see in the screen, the General Mills share price moved up the last time they reported earnings. And General Mills has been bad in 2017. It is under 9% for the year. It has been challenging for General Mills to find some growth. Now let's go to the next company, which is Carmax. And Carmax has beaten the EPS 3 out of the last 4 times. The other time was an inline. And Carmax has beaten the revenue 2 out of the last 4 times. One of those times were in line. And as you can see in the screen, the company has reacted positive after they report earnings. The share price has gone up 3 out of the last 4 quarters. And in 2017, the company has gone up over 5%. And to be honest, I think Carmax is coming back. I think the share price is going to move up. It's going to beat the EPS and revenue. And I think Carmax benefits when we have those 2 hurricanes because a lot of people are looking to replace their cars. And I'm actually bullish on this company. I think this company is gonna move up during the next few months. And that is everything for next week. Please leave in the comment section below which of the following companies that I'm gonna report next week you found really interesting. For me, there are 3 companies that I found interesting. Adobe, that I mentioned in the September video, FedEx, which is a fantastic company, and Carmax, which I think is going to come back and start moving higher. And as always, you can subscribe to the Financial Information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. Have an excellent day and take care, my friends.